Good morning, everybody, and this is your Dow Jones day trade setup for today. So we have had a fairly strong and clear break of the structure that we see here. So this structure we have here is an inverse head and shoulders, and neckline depends how you want to play this, but neckline is either at 35,070 or 34,969. I would just take 3,500. That is the level we need to pay attention to. That's the level we've broken. And what we're looking for is some form of a pullback onto structure for an opportunity to buy. So let's just be conservative there. That is the structure there. So you are looking at something along the lines of that. So 36,255. And if you look to the left, that would clearly break the previous highs. And it's going to get a bit messy here, but we need those levels in. Okay, there we go. So you can see we're right here at the underside of this structure here. So, and the oscillators group to the upside. So I would really want to see a pullback onto this area here. I just want to get rid of this level. There we go. Okay, so have a careful look what happened on Friday. You can see we were forming what looked like a bit of a flag, and then we had a break to the upside. So that's pretty solid, really solid move up. Moving averages have all crossed over. Only problem is that oscillators group to the upside. So that is warning us that we need to be wary of just jumping in long at the top, but it can still continue going for forever, pretty much. So there's no real rule that's set in stone that says now you'll get a pullback, but that's what we're looking for. We're looking for a pullback in order to buy. So I'm looking for a revisit of 3,500. 3,500 would be a fairly good entry for me to get long again. Only concern I've got with that is that it's pretty far down on Friday's move. So you can see Friday's move started here and ended up in this area. So 15 minutes is the right way to do this. Keep watching your 15-minute chart. I don't see that there are gaps right at the bottom here, and on Thursday as well, quite a few gaps in actual fact. So yeah, nothing's impossible. You could see a pullback into this area, this 35 area today, or alternatively what you're going to see is a bit of a range right where we are now, and that's going to be your line in the sand, I would assume, 35,200. So 35,200, if we can get some kind of a pullback onto that, or alternatively you're going to see this range continue for most of the day, and then at the US Open break the range to the upside and chase 35,500. For me, I think the safest bet at the moment, because there's a bit of divergence forming as well, is just wait for the oscillator to either ease off the top here, even if it just does that, or alternatively group right at the bottom. That's going to give indication that you're probably looking for a continuation to the upside, and I would be paying attention to these different levels here. So 35,200 and 3,500. Those are the two areas that I would be paying attention to today. But it is buy the dip, so we're looking for opportunity to buy. So any structure to the downside, so if it comes back, find some support, that's the opportunity to buy. If it breaks and comes back and retests this area, so in other words flips, you can see where price is now, 35,300. So if it flips 35,300 into support, in other words breaks past, come back and test it, that would be the next opportunity to buy into this. Nice tight stop below this range. So that's the structure we see at the moment. That's kind of the play on offer. And yeah, I think earnings season is still, we're in early part of earnings season, so I suspect this is going to move quite a bit still. Anyway, that's it for me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.